What is going on, guys? Welcome back. Commentary for you. Markets down today. We're going to open a position, but I want to start off by saying in these videos, I've been guilty as every other creator in saying, you get a free stock, I get a free stock, link in the description, and leave it at that. When I started this series, $120, $10 a month, the goal was to build a portfolio that was literally done on a very small amount of money that I feel like everyone has access to. I myself didn't fully comprehend how valuable the free shares would be. When you look at these four free stocks and you talk about $40, you're talking about a third of what I have invested right back in my pocket. Whether I sell them and cash them out or whether I sell them to reinvest into something I want, it's a very meaningful amount of money. And if I can do this through a computer, through a cell phone screen for many of you, then I know you can go out. 52% of people invest in the stock market and say to someone, hey, do you invest? What's your experience? Whether it's a family member, friend, neighbor, relative, coworker, you can get referrals just as easy, if not more, than I can. Now, some of these you're not always going to keep. This Buenos Aires Bank has went from $9, $10 to $11, but it's just so volatile, and I don't even want to be in domestic banking, much less international. However, Kronos Worldwide, I talk about boring companies. This is a stock, if you got it, I'm excited to hold. Basically what they do is they put color into titanium dioxide pigment and then sell that to paint, plastic, and paper manufacturers. Boring line of business, but been around since 1916. It's a stable line of business. We're always going to need color in products, and that's one of the services they allow to happen. So, moving forward, Global Water Resources is the position I opened. I've been watching this. As you can see, back to even last night where they were 10.55. I set a price target of 10.50. They fell today to 10.48. I was going to buy two for 21, but I only bought one at 10.48. We'll talk about why. What they do. They have technologies in place to basically clean and reuse water. This is so critical. They're based in Arizona, and I think obviously we all understand the importance of water as a resource. I wanted a resource in this portfolio. They have delivered 27 billion gallons of water. They have saved 8.52 billion and served 46,000 customers. From a financial standpoint, they've been up and down like every business, but I see these numbers getting better. They're beating, they're in line, and they're missing by less because they're projecting things better. That's important for me. When I look at where they are right now in terms of value, high at 12.35, low at 9.35. I set 10.50 right in the middle. I thought 10.50, obviously, for $21 would be fitting, but I want to see where they go. I want to see where this pulls back to. I bought one at 10.48. They do pay a dividend. It's only right around 3% right now. I believe it's 2 cents per month. There's a lot high payers out there, but this is a lot less risk in my opinion. You have to mitigate risk versus reward. This is stability and a little bit back in my pocket rather than unstable and a lot back in my pocket. So with that process in mind, I went with a resource like water. I also want to look into a resource like land and food, whether that's farm partners, whether that's Gladstone land. Right now, even though you have a similar yield on those companies, their price target is much higher than I want to be in. They're at the higher end of the spectrum of where they could be in terms of cost. I want to wait and look for a stock like this that's on the lower side of that. So I'm buying into a price that's low, that has room to go up a little bit and still pay me the dividend on a safer yield. So even though I want to buy Gladstone land today, even though I want to buy Farmland Partners today, I'm not, because I'm waiting for those prices to pull back a little bit. And when you have crashes like this, down 2% as a whole, you need to be prepared to take advantage of that. And that, to me, comes right back to cash as a position. I have this, $40 left from our initial CVS purchase, which is pulled back in its own right. But when you take that, you add in the shares that we talked about in the beginning, getting for free, it leaves you leveraged to be able to take advantage of things when they pull back a little bit. And I feel like there's going to be a little bit more pullback in the market. I'd like to see, ideally, a 5% pullback day, a 4% pullback day, not just a 2%. I mean, I know we're dealing with small amounts of money, 2 cents, 10 cents, but we're also dealing with an investment that's small, like $120. So to me, I think where we are right now, we've got a dividend-paying large brand like CVS in a field that's needed, medical. We've now got a water resource, which is essential to our life. Not the biggest company. I mean, certainly there's bigger ones out there. But I feel like at our price range, this was going to be the best fit for us. Obviously, we're not in a position to go out and get, you know, a $60, $70, $80 water stock. So I feel like where we are right now is in a good position to grow and see dividend returns. Obviously, waiting for those free stocks to clear and determining an exit point will be the next step. And then if we need to reinvest those funds, they will be there. With that said, appreciate you guys checking this out. And you know I will be back in the week with more commentary.